Hi there, I'm Isaac. Today I'm going to take you through one of my trades. This is from last week, an S&P liquidation move. This is from Thursday the 25th of March. Really quickly, this is an overview of the 1 minute chart. You can see I sort of built a short in here, looking for a liquidation down through the range. We're just going to focus sort of on the start, the sort of reasoning behind the move and my execution, or how you should execute it ideally, and not so much this end. This got a bit more confusing as we kind of swapped between the cash and the global extension, so almost like it's best to look at this piece as another trade. But like all in all, it's sort of like it ties together. So we're just going to look at first the entry, and then from here, I mean, ideally you'd say, well, okay, so long as the market, so long as the market holds below this white line, the trade's still on. But obviously, you get these little false breaks. So, as long as we're not doing volume above that line, this trade holds and you're expecting kind of bigger wash down. So I got out of the short here. I got a little bit confused how to manage, but realistically I could have held it, for pretty much most of the day, until we had the failure down here. Okay, so let's just try and put some context on that 1 minute chart. So let's just start here at the top. On the left. This is the, in this box, just that I've drawn here. This is the daily chart for the S&P, and you can see, like down here's US elections, Pfizer, and the market's just been kind of like bidding up in this kind of like megaphoning type channel. So basically we're, in this, we're in the context of this mature bullish market. Now, what we can see if we go to the profiles is we've got this, this kind of like grind up from last week. And, when you look at these profiles, you got to say to yourself, I suppose ask some questions, right? You've got quite, elongated profiles here. So they're not really offering a lot of support. And then this one's really blocking. And this one here has already been kind of resolved on this session. But either way, we've got this kind of like vulnerable one time framing. So this is, very vulnerable to a shakeout. Now, up here, the market's at all-time highs. These profiles also don't look great. Take for example, this profile, even this one here, this one as well, even very blocky, and so what it's telling us is gain participation at the highs isn't very good. Even more so, and it will be more obvious on the next page, is that between these 2 days we've got a double false break of the all-time highs. Then what happens is the market then after this failure starts to roll over, and then you've got here this, I'm going to call it a tail, but not really in this buying tail, selling tail sense. In a sense, it's a buying tail, but a horrible one, right? It's like a 4 or 5 TPO thick buying tail. Now, this is not, a great reversal. And so, time spent in this region then makes the market vulnerable to go and wash out some of that horrible bid, or that vulnerable bid. Now, the market does spend time in here, there, and there in the Globex session. But what's also key to this picture is these profiles here. Now, I've called these sort of like up here in my notes, liquidation half profiles. And basically, a good profile or a balanced profile, does something like this, right? And that creates your normal distribution. And up in this top half, you've got your initiative buyer and your responsive seller. Now down the lows, you've got your initiative seller and your responsive buyer. Now, on profiles like these, you'll notice that there is no tail, right? We aren't getting this balance. And in fact, what these profiles really look like, because they're often quite blocky at the top, is almost like a half profile. As in, if I was to continue drawing the body there, and then draw this, now it would start to look a bit more like a balance profile, like what I've drawn on the side. And so basically, this profile to me is kind of telling this story, right? There we have an initiative seller and a responsive buyer. Sorry, I didn't write buyer there. Now, I suppose you've got to ask yourself, put all of this in context now, right? We've got a market at all-time highs, can't bid, right? It's leaving these poor highs kind of like half profiles. Now, what's that telling us? Well, if we're at all-time highs and people aren't buying and we're getting these sort of like late sell-offs, then it's kind of suggesting we're going into this period of profit taking, right? So long liquidation. And so then you think to yourself, well, okay, these initiative sellers are probably our, we're probably our longs from this big bid that we've had. And I suppose the responsive buyers are other longs, willing to, who are still trying to decide, whether they should be accumulating more or not. So anyway, you get this situation. And so when you get this, the market, I suppose, has to do one of two things, like it's either got to bid up through here or eventually trade down here, where it's either going to find a new buyer and come back up, or it's going to continue, having to sell off lower to find some liquidity for people to get out of their longs. Now, one of the things is that, these profiles often are quite tempting, like the highs of these look pretty horrible. This one here is a 3 TPO ledge. This is no excess. This is sort of no 2 TPO, 3, well, it's a ledge, a horrible high. And, it's tempting to want to just buy through this, but that's often not very easy because, you get up there and there's just this like thick wall of selling. And so in this context, that trade's not a great trade, and often to get through those highs with any conviction, the market has to go through this path to auction lower to find a buyer to then take it back up through. All right, anyway, so that's kind of this described in cash session profiles anyway, and where we're at. But actually, the move happens in Globex, but of course, most of the information's in cash, so this is a really important place to start. Now, we're here, we've got a 30-minute chart, and yeah, we're going to break this down one more time in the candlestick. So again, here's our vulnerable bid. Now, kind of looking back, the market has auctioned as low as here, 75s. So it hasn't quite resolved this tail. And then if we look down, well, we've got a cluster of TPOs here, and then this swing low is also like this no excess swing low. So kind of, I'm expecting this to be resolved, this to be resolved, and then if we go down here, we also have this little cluster of 3 TPOs here, which is also not very good. And again, this daily low, which is also like, these lows here are pretty poor as well. So, there's none of these sort of swing lows on this move up are really convincing. So, if this market goes, it can knife through that. And I suppose the only thing we've got to keep in mind here is that we're in a relatively low volatility environment, so it might not be as as explosive as it may be under sort of like a high VIX environment. But either way, the market can knife through, and we've got to just keep that in mind. Now, I talked about double failure at highs. Well, here's last week's high. The market, or the week before's high, sorry. The market then ledged underneath it, pushed above. And this is really like a go, no-go situation. It did this balance here, came off on FOMC, it bid back above, did this, sort of like a small head and shoulders, came off again, failed, and then the liquidation started. And we've said sort of like while we're below this high, that swing high, we're kind of in liquidation territory. Now, coming back to here, so here is this sort of like 3 to 5 TPO thick tail. We've then gone in this new week, driven higher, or like bid higher in this kind of like really vulnerable bid with no, support this bit here. The market's then washed back and pretty much undone it all, gone back to the highs, and then it's left this ugly block which it hasn't been able to bid through. It's come back down. It's then auctioned out this block really well. You can see how many times, in this 30-minute chart, we've just gone over and over the same prices, right? Really just using up all the liquidity in that zone. The market's then gone and auctioned here. It's then pushed back higher and auctioned here. Come back down, spend a little bit of time back in this one, and then driven lower. And if we kind of connect up all of these, these lines, well, what you find is we've really now auctioned this area. This market has kind of done it. Then we go, all right, we now had a liquidation on the Wednesday evening, which brought us down here, and the market's then auctioned this zone. And it's auctioned that zone for a very long time. And so now you can see that I can draw a bigger square, right? We've auctioned out this whole area now. And a considerable amount of that is back in this, thick tail. Now, given that this thick tail offers really poor support, and we've auctioned all this, the market now is pretty much forced to make a choice. Either A, has to bid up through there, and the bid should be easy, but the issue is the market has no reason to bid, and it has not been able to bid. And so really we're thinking now in this context of a market that's, having these liquidations, long liquidations, that it's likely that this market needs to go down here where A either reverses like it did or continues. And that is basically the premise for this. Now, what's interesting about this is as this market has gone and pretty much used up all of liquidity by auctioning pretty much every price range in this zone, I mean, you could argue except for this little gap in here, it's auctioned everywhere. Now, this then gave me the confidence to go for this move before cash. Because you've got to ask yourself, okay, if the market doesn't go now, well, where can it go? Well, it's pretty hard for it to stay in this range. And if it goes up here, it's really got to do this, but I'm not seeing any reason for it to do this. So if it starts coming down here, well, it's coming because, people are trying to get out of long positions and there isn't enough liquidity for them. And so they're going to be forced to do it. It's not a matter of do I want to do it now? It's kind of I have to do it now. And so that's what we see, and the market comes off. And then so we've got to ask yourself, well, okay, if you want to take this trade, then what do you need to see on the ladder? And you need to see, the ladder holding under 75s. Now, there's also this bit here, 77s, which is this line that I've now, was yellow, now drawn over it in red. That is kind of the bottom of, this liquidation from the day before, and then also from, the Globex low from this session. And so once we go through there, you're going to say, well, all this positioning, anyone who got long in there is now offside. And you're going to assume that that's going to drive the market a bit lower, which is then going to put us below this line here, which is where the big asymmetry kicks in, because now everybody up here who's positioned long is offside. And now we're going to get this big unwind. And so that's the premise of the trade. So A, we're just looking for the market to come off. We're looking for volumes to confirm it. And then, looking to get short. So let's just go back to a quick summary. So the market's bullish in the higher time frame, but has moved to this profit-taking, such a liquidation state. The market's got a backdrop of a vulnerable bid and failures at all-time highs, giving it a bearish bias. The market's got this inflection point at 75s, where both the technicals and positioning are in place. So i.e. by positioning, all the longs are being forced offside. The market is auctioned everywhere below the liquidation highs, and so is pressured to make a choice. It either has to bid through the highs or sell off through the lows, and this can force its hand early. So the trade idea, as I said before, is to get short on volumes through 38.75, looking for a liquidation. The market's bearish so long as it's below there. So coming back here, so you can see actually I started trying to build a short here below 77s. As I said, we were looking at the 30-minute candles, and then look to just add some more down here. Now, I suppose been going on a bit of a journey recently of sort of starting to get price action a bit more, but sometimes getting it in the wrong place or the wrong context. And so you'll see when we watch the ladder that I'm a little bit sort of shaky. I definitely know what I want to do, but not necessarily like solid on my executions like click and I'm really sure about it. There's like a little bit of pausing hesitation, am I getting it at the right time? But I kind of know I need to sell this zone, which is, I suppose, very obvious to see because I've sized it up to pretty much full size. Probably would have got full size if I hadn't have got out of this one because I didn't want to put too much size on lower down. I mean, like, as I, when this moment I saw this move was on was the best time to apply my risk. So yeah, goal was to get to full size, but didn't do it. Anyway, yeah, so what I'm going to try and do is not so much talk through how I traded it per se, like as we see me click, but just talk about, what we're seeing and, ideally how you would trade it. And then remembering that I said that there was really not much support in the higher time frame, so we could have knifed down. And although the market didn't, I suppose you've got to remember, one, the market can knife down, so you need to, keep that in mind. And then two, well, cash opens here. This is the cash open. And so the cash opens below last week's lows. And so long as the market then stays below here, everyone who's long's getting forced out. And actually, if you were to look at like a little volume profile of this region, it would look like this. So as in, I suppose I'll keep it in line here. So as in everybody who, there was virtually no trade here and all the absorption down here. So that's kind of telling you that, this market is being held, in which case, this liquidation is still on. So ideally, this is a trade I knew I wanted to get in because it could do this, but then also it could do this. And so it was one that I just had to be prepared that while it was making lower lows, which it was doing all through here, I had to just stay in. Okay, let's get to the recording now. Okay, so this is SPOO here. And so currently the market's trading just above, or at 80s, at the 80 handle. Now, here's a 77s, like this is the low. I just highlighted a block of 3 because I wanted to make sure I couldn't miss it on the ladder. But basically, at this point, this is where, the market has broken those overnight lows and where we're expecting, the overnight positioning potentially to come out, which could take us then down through here into this other, through the 75s. And so you can see the market had a little bit of absorption up in the 80s, and then now it's coming off, it's selling off pretty much in a straight line. And what you'll notice is the market has actually gone, I mean, if this is that level, it has just one tick to the low, come up, found absorption here, which it really needed to do now that it was sort of committing to the downside for this idea to play out. And now, we just need to see some follow through of the market going lower. So you can see, all right, even there was like, a big market order coming in, taking out a few prices, and the market's holding offered. We've got 50s now trading into 78s. Okay, the market's gone right down to 78 double O's, back at the lows. So now, we want to see what the market went and ticked. We just want to see the market show a bit more aggression through there. So yeah, that's sort of ideal, right? Now we've just come through the lows and the market's showed us, it's holding bid now below. Okay, the price action's still heavy here. We got 70 traded at 76 and the market's pulling back. Relatively low volume, 7.3, 14, 18, 1. Now, you can see here, I didn't really want to see that. And this pop-up wasn't really what I wanted, but so long as we stay below the 80s absorption zone, this was still on. Now, under sort of liquidations, I suppose there's always the chance that, when the market comes down, breaks the level, it can really hold because someone can just sit here, trying to take up any buying can just be sold straight into. And so I suppose sometimes on these trades, you have to actually be relatively aggressive. Now, in saying that, you then still aren't wrong until the market's back up here. So where I got in first was a good place to get in. I just probably needed to be aware that, well, if there was a pullback, it's something I needed to sell into rather than, worry about. So anyway, again, the market's now back below the 77s and spending time here, right? And so again, that's like sort of another confirmation. And another way to sort of like judge how, much sort of like the quality of that time is again to look over here. And you can see that we've had a clear pickup in volumes on the 1 minute. And so that's really confirming everything, right? Like if we're coming off, we're getting volumes up, we're staying offered, then this is on. And so here the market's sort of like rotating around these 77s now. Again, a really big hit in the market. So you can see that, there is, I suppose, like a lot of conviction in the sellers, right? Like we've come right down from sort of 77s and a half, now down to 75. Now here's that key level, right? So now this is a ledge. That was last week's lows. We've stopped exactly to the tick. So now, this is a time where, okay, this low has just been made worse. I mean, really you want to be putting all your, getting all your size on. Ideally, if you can, sell anything in this range because the market's now come out of the lows. It's rotated around here a bit, but it's come down and really showed its hand. This market should now sort of auction here and shouldn't really pop back above. So in some ways, this is like the ideal. We'd expect to now this sort of like 1 minute, one time framing type situation. Because what we've effectively got now is this support that was poor is just sort of even more poor. And then we've got the weight of this overnight auction block, that positioning above. And so all this is hinting at the fact that we should resolve this, which is then hinting that this even bigger pocket of positioning becomes into play. All right, sorry for scribbling everywhere, but hopefully that helps make my point. All right, so as I said, this trade stays on so long now as this market's staying offered, we've got volumes. You can see, immediately, all right, this market delta is negative, volumes are high, right? It's kind of showing us everything, and we're staying offered. We're in that zone. Right, you can see the market's coming back down to the lows. So the real, I suppose, like asymmetry point is as soon as the market crosses this line, then the trade's on. So again, that's another time to add because this technical bias of the downside is in play and the positioning is in play. But I suppose because we've got this kind of like those little feeder ideas I just described, then you have this opportunity for the early access. Okay, and so now we're trading 75, so we've optioned that price gain. Now the market's just shot through, so this is when you need to be getting short. All right. And so now we're looking to see, I suppose, we're looking to see this interaction down here and looking for this market to potentially show us, like how aggressively it wants to auction lower. And so you can see here that this market has really stayed, like pinned below these 75s. And so again, that's kind of the result. That's the result of this positioning now coming into play. And so you can see here now actually the market's just shot lower. We've seen, just a seller aggression into the lows. So we were slightly more rotational here around 77s, which had the overnight positioning above it. When we came here below the 75s, the market was relatively kind of tight. And that is really sort of showing you the difference in how important, that positioning is, the difference, overnight positioning, what it adds to the trade. And then when you come and you've got, like weeks of positioning, or a week of positioning or so, a week and a half, how much that means. And so here you can see that I was trying to put another lot on and had to chase the market down, which isn't ideal. And that was because, of what I said earlier, because we had this vulnerable bid as the backdrop, and then we had this kind of like failure up at all-time highs, the market can knife through here. So maybe the thing I overlooked was the fact that volatility wasn't that high, but this market could have just ripped, right? There was nothing here in this backdrop that said, you've got to worry about, that you're offering into any strength, right? And so I knew I needed to get on my sides fast once we got below because of the risk of this knifing. So which is why I chased it down a bit, which wasn't ideal. But I kind of felt like it had to be done. So anyway, and so now the market's holding below. You can see that we've got, what was, really good volume has now sort of been dwarfed by even bigger volume. And so again, everything in your 1 minute candles is also sort of showing you what you want to see. Delta's gone a bit flat down here. Oh, sorry, that was totally in the wrong spot. Which is also okay, because basically what this is saying, someone's sitting here in this zone and, whenever it auctions up, they're just going to sell it again. And they're not being overly aggressive, which is often a feature of liquidations. Often the market will go down and it will make these like long flat zones and then come down and do this, and the seller will just sit here. And then once the zone stops holding, then the competition between sellers will push the market lower, and then the sellers will sit here again until all this, they've used all the liquidity in that zone and then offer down. And so, we've probably got that here where, so long as the market holds there, then the sellers are still firmly in control of this. And saying that, in that instance, if the sellers aren't the ones kind of initiating the trade when we're doing this sideways bit, you're not necessarily going to see it on the delta, but the delta also doesn't suggest a low, which is why you can still have conviction that this trade's going to go back through those lows. Now let's just go back to the PowerPoint. And so what you can see is, we just looked at this. There was this, the market hovered kind of around here. And actually, as I said, I was talking about sellers sitting just below the level. You can see that the market then pulls back again, is rejected in this candle, and then we get this offer. And then from there, we're making lower lows, lower highs, and and so the trade continues until cash, where we get this new sort of questioning when now, the new mix of buyers and sellers have got to redetermine what the market's doing. So I suppose ideally for me, I wanted to see, I thought that there was really weak support and or no support sort of down to this 47s area. Now, I ideally wanted to see that happen earlier, but you can see it didn't happen until cash. And so, ideally, I would have seen something like this, in which case I've got out of the trade earlier, but as it lasted into cash, it then forces you to ask a lot more questions. I might talk about this actually in a separate stream, because I think sometimes treating, or like looking at how you treat a trade when you go from a Globex session into a cash session, I suppose you've got to be careful, because you don't want to take over too much information about what you know from the Globex session, because it kind of gets put out of date pretty fast. You're going from, like if I was to draw a chart of participation in the market over time, and this is Globex, and this is cash, it kind of goes like this. And so anything that you saw down there is quite unimportant. When you go into this cash session, as it starts to generate its own information, it very quickly sort of overshadows the Globex information. And so you've got to be a bit careful, thinking like, all right, we've got these highs, and as long as we stay below it, we're good. But cash comes in, those highs aren't really important to cash at all. So when we pop through them and then I took mine off, well, it was kind of irrelevant. The key was up here. But anyway, I got a little bit too caught up in the moment. So I turned what was like a really good trade idea and entry in a good location and sort of gave back like a good half of the trade, and then there was another half of it actually to capture in this move here. Okay, so that's that. So anyway, hopefully that helps you. I suppose the key takeaways are understanding the liquidation and then also what you want to see at the start of these liquidation moves. And yeah, that was the key thing to take away from this. Now, just going again into key takeaways. So when a bullish market's going into a profit-taking state, they start to leave profiles with poor highs, which can be confusing when interpreted in the wrong context. So here, I'm just going back into what I said at the start when I drew that diagram about, liquidation half profile. So the key for understanding this is that the poor highs, which show that there's no initiative buyer in the market, because that initiative buyer would give you the tail and then round the profile out a little bit more at the top. And so this is really important, right? Because this whole trade is completely based around the idea that we're having these liquidation profiles, right? We're at all-time highs. We've started trading this range, but our profiles are starting to look like this. And then eventually, when we break the bottom of this range, those are the clue. And so when you get these profiles holding, so as in, I've got a couple of these profiles and we're all doing this kind of thing, lower highs, so they're holding as in there is no buyer able to take us through the highs, then the market very likely has to auction lower to find a new buyer before it's going to take out those highs. You can't think to yourself, okay, if I just drew two of them, all right, the market's back here, I've got a ledge here, and a tail below. And so there's this bullish skew. And I'm just going to get long right underneath this bit of thick selling, right? To trade up like that. So, it's really key just to remember the context in which those highs are made and the fact that here the sellers are controlling this market, right? And so, yeah, you've just got to sort of keep that in mind that, okay, that's the context that we're in. And that if you think in that really just traditional sense of like tails versus poor highs and try and get long, that's the wrong kind of way to think about it. So anyway, hopefully that clears it up a bit. Anyway, I hope this has been an interesting session, basically on liquidations and then sort of how they fit into a bigger liquidation setup. And yeah, I'll be back with another one for you next week. All right, have a good week trading, everyone. Cheers.
If you find this video interesting, if you want to go deep into the AXIA training method and how our trading team of 7-figure traders develop setups and strategies and how they learn to build the most profitable trades across all market environments, then join me in this workshop. Now in this workshop, you're going to learn 3 powerful steps we use to train all our traders on both our London and our Poland trading desks to help build incredible levels of consistency. How to predictably understand which setups work and which don't. You're going to learn our 2 main strategies for how we perfect our trade timing before we enter every single trade. You're going to learn the VEL concept, which is our one and only technique we use to leverage our largest trades. You'll also learn how to avoid trading setups that don't work, how to avoid those large losses, and our main method we use to identify them that saves our traders significant amounts of capital. Finally, you will learn how our traders use the power of network learning to find market patterns quicker than ever before, so you shortcut that learning curve. In the workshop, we want to program your awareness of elite performance, to program your ability to choose the right setups, and program your ability to be a consistent trader. So the trades that you execute become more simple and clearer. And I can tell you this, you'll never see the markets the same again. You'll never look at the markets with a narrow view of getting lost in all the noise and confusion. You'll take your first step towards a deep edge market awareness. I cannot wait for you to join me in this workshop. And I think you're in for a massive paradigm shift in your understanding of how to develop as a trader. So join me by clicking on the top right-hand corner of the screen and sign up for this powerful training workshop, or visit elitetraderworkshop.com.